There was some good. Actually, the most important good was diagnosing that euro pound was heading lower, which made the pound your preferred long and the euro your preferred short. That's what's important about trade selection. Even though the dollar is headed higher, pound has gotten a nice lift. I'll show you how it broke out of that wedge triangle I was showing on Monday. And the short recommendation, and the euro is good for about 60 pips, makes up for the 20 pip bad idea from last Wednesday. And now let's go right to the dollar. So here we are at this 95 range. As you can see, we had a few pokes above 95. Still think that's possible. These highs up here, 95.20, so we could go 95.20, maybe 95.5. I'm not looking for an explosion, although we do have Fed minutes coming out. To me, what looks more likely is now we're getting close, maybe within the next several days, of the dollar ending this initial surge off the inflection point low that I called the day before it happened. So now I'd be looking for some type of dollar pullback in here after a little bit more strength. I was looking for the low 112s in the euro. That still looks viable and achievable. So give me a Y if you're with me on my view of the Dixie. I think that we could pull back. Why not back to 93.5, 93? And some of, there's almost unanimous opinion now that the dollar has bottomed, and I was taking it a step at a time. I said there'd be a low. You never know if it's the low or a low. So I want to see what happens on a pullback. I think that we could get one. So start to be alert to that. We've taken out some stops above the recent high 61.8 level in US dollar yen. And that was something that was forecasted. So we're getting closer to potential attempts to short the yen. Canada failed again at resistance as crude is pushing up again to new highs. But there's all kinds of fib levels in the crude market right now. I'd be very careful being long the crude. Maybe it trades 50. And Canada pulls back again one more time towards the 127 level. Still think that it could have 130, 150 in it before it's over. As you can see, even on the daily, we're under 70, but really not diverging. On some shorter time frames we are. It's going to be interesting to see if I'm right. And really the crude has been fighting a fairly firm dollar for the past few days. It's going to be interesting to see what happens. If I'm correct about the dollar losing a bit of its bid and coming off. So this may pressure the Canada one more time. Still think before we make the lows, take out 125, that this recent high isn't it. Give me a Y if you're with me. Gold as well holding up pretty good in the face of recent dollar strengths. Also becoming more two-sided. Their selling rallies were up 10 at one point and end up being up 3. So very possible that we're just going to roll over here. To me, it would be a much better shorting opportunity if we shot up one more time to above 1300 towards 1320, although you could call this 1, 2, 3. It's sure taking its time to roll over. So neutral on that. I'd be a seller back over 1300 towards 1320 on a third drive line up here and divergence. This high was 65 on the RSI, so even if we rallied 50 bucks from here, perhaps we put in a lower high on the RSI. That would be interesting to me. Give me a Y if you're with me. S&P's really the same type of chop, up day, down day, up day, down day. We're kind of in that mode in a lot of different markets. The bulls are saying we're going to hold here at 2040, head up towards 2116 for one more terminal thrust. You could say, and this is how we could come up with this 1960 target, 2100, 2040, We start closing back under 2040. There you go. There's 1960. That could play a role in US dollar yen beginning to sell off one more time. Give me a Y if you're with me on that outside market analysis. And then the treasuries. So the US decided to go ahead and release the 9/11 papers, which are going to shed a pretty negative light on the Saudis. And they did that yesterday. So is it any surprise that treasury bonds are sharply lower? Could be Saudi liquidation making good on their threat that they're going to dump treasuries. If we release that here in the U.S., face and honor are very important in that kingdom. So now this looks like we could head down. This could have just been another failure in the bonds. And really, this could be the second one, starting to look more like a descending triangle here. If rates are starting to head up, and I don't think this is about the Fed, only the short end is about the Fed, makes me a little hesitant to get aggressive about any shorting for big moves. If the treasuries are bad, that should be supportive of a weaker yen and a higher US dollar yen. Give me a Y if you understand that. So I've covered all our outside markets. I'll do it one more time on a review of the instruments in crude and gold, give you some shorter term time frame looks. So before I move on to the instruments, are there any questions on what I've covered so far? Okay, so this was the key in all the trading recommendations. Here we were on Monday in Euro Pound, and I said it looked heavy, looked like we were going to head lower. If you took that short, you've got some nice trades going here. I was using it more or less for my trade selection being important because if you're bullish a dollar, but you shorted the pound, which you wouldn't have done if you had this diagnosed properly that Euro Pound was heading down, that makes the pound your preferred long. And Euro is still making new lows. We put in a higher low here in the pound, and this was a short recommendation up in here on Monday around 1330, 1340. You have about 50 pips made here. I still think there's potential for a pullback down towards this low 122 level. And should the RSI begin to stabilize above 30, that'll be your warning for covering shorts. I know a lot of people are thinking we're on our way to under parity now and taking out the 105 level. I'm not completely in that camp if you followed me on what I said on the dollar index. So this was a good recommendation. Shorting Euro on strength, I said anywhere around 1340 to 1360. We got to 1345. You have money made. And the other reason was the RSI picture, which also helped me diagnose the Euro Pound direction. We had a confirmed low. I pointed this out Monday, which implied that there would be another low, and that's exactly what happened. So if you follow my RSI work, which I've renamed to Real Simple Implicator, when I came in here Monday and the fact that we had a confirmed low was actionable for me to sell rallies, knowing that there was a high probability of another low occurring in the euro, and that has manifested. Not the greatest reading, so perhaps we're starting to look at a 1, 2, 3 setting up here as well. In euro, call this drive 1, call this drive 2, and perhaps we get some type of third drive formation here. Either way, you have money made. You should protect yourself. I want to see what happens down here at 1240 to the low 12s and looking for some type of divergence and possibly some participation on the long side. So this is what I showed on Monday in the pound, and I was thinking that there might be one more drive for a 3. That didn't happen. I drew this wedge line off the daily, I believe, the top top line of the wedge. Actually, not sure why I anchored it there. But we have had a breakout of this wedge here. And again, the tip-off to me was while Euro was making new lows and RSI was under 30, back here when I was talking to you on Monday, we already had a nice divergence above 30. That was your warning sign. We didn't get the third drive. But your next warning sign was Euro made a new low, and all we did was retrace here. So the potential of higher levels in the pound are possible. To me, it looks like I talked about, should we break out of this formation, there is potential for a move back to these levels, back to above 149 up here. To me, it's unclear. If you were fortunate enough to be long, I'd be considering taking profits here at this range up here, at this 46.50 level in here, and protect your Euro shorts. So what I'm thinking is if the Euro pushes down one more time, that perhaps we get some type of test here in the pound to pull back towards 45.50 before the next advance. Give me a Y if you're with me. But so far, no sign of a bottom in Euro pound. So Euro pound still remains telling you to sell rallies in Euro and buy dips in the pound. Give me a Y if you're with me on that. I was thinking about this Brexit thing that everyone's talking about. It could end up being a buy the rumor, sell the fact that the pound rallies into the Brexit vote up towards levels that I mentioned up there. And on the decision to stay within the EU, then the pound puts on the top. Just a little something to put in the back of your mind that it could turn into it's still a month away, of buying the rumor and selling the fact. Give me a Y if you're with me. So here's the yen. Looked for this rally here in the end, so now we're starting to get a little bit of a tail. You know, we stalled at 61.8. It was sideways, 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 and now it's starting to look like it's losing momentum. We're diverging on the 4-hour. Here's a new high. We're diverging on the 1-hour. Still could make that move up towards that 76.4 level. Up here around the 110 and a half level. 110.35. Right now we're at the 70.7, but 76.4 could still work out. I believe that we're setting up a short where we could get something like this once we break out and take out the 108.80 level. So looking for shorting opportunities in the end. If I'm right about the dollar beginning to peak out, we should be looking for shorts in the end. Here's your confirmed high. And now we're starting to get some divergence. So up above 110 with maybe 150 point stop could be the way to go in the end. That perhaps this is still not the bottom, and this might be drive 1 in the end. This could be drive 2 in the end, and perhaps we're going to get a drive 3 on the daily, which would come in approximately down around the 104 level. When the days are weeks ahead, you got to get out of the way over 112. But yen looking to be setting up shorting opportunities here in the next couple days, and then potentially a third drive down to 104. Please give me a Y if you're with me on my analysis of US dollar yen. So I want to get to the commodity currencies now. You know, a higher energy, strong energy market is negative for Canada. And we caught this big move a week or so ago, then caught the correction. Then I said cover shorts and get long. I don't think I'd be long right here. Perhaps what we're going to get now is an A, B, C for B, and a C to the downside. While crude finishes its blow off, perhaps we see 27.5 to 27 again. If you want to take a shot at a short, you're wrong over these highs. You'll have to get out of the way above 130, risking 80 to perhaps have it pull back, which it never got back to the 50% retrace level, coming in at 27.40 and 61.8, back all the way at 26.5. But I still don't believe this is the complete end of this correction. We had a nice 1,100 point decline, almost 1,200 here. And still looks to me, I'm talking about 31.5 to 33. So perhaps we're going to pull back, put in a higher low, and then go again as crude comes off. So crude blows off, Canada comes off one more time towards 27, and then heads up to 1.5 to 2.5. Give me a Y if you're with me on my analysis. Canada's been very good to us. Everyone, let's thank the loonie. It's definitely helped build up our war chest in the last several weeks. So let's go to its sister or its brother, whatever you want to say, as I still thought there was going to be another low in Aussie. This must have been some central bank news. I still think we're going to head back down towards the 72.20 level. Maybe this is drive 1, drive 2, and we get one more shot down. Down here, I'd be interested down around the 72 area at attempting some longs in the Aussie. I think it would have been more bearish if we had taken out these lows and cleaned out the stops. This low being 72.48. This low being 72.50. So the people that have their stops under the low, they're getting some hope. I believe their hopes will be dashed as we head down to the low 72 handle region. Give me a Y if you're with me on Aussie. So with that, Kiwi's still looking vulnerable, but I want to go to EuroCAD now because I see something interesting setting up here. I'm going to call this 140 level the neckline of a head and shoulders top formation, with the left shoulder being here, the head being here, and looking for one more trip down to the neckline, which would also set up a 1, a 2, and a 3 drive to a bottom, which is about 500 pips from here. Okay, so looking for 140 to manifest. And here, this will be my Nostradamus. After 140, if we don't break down, and I don't believe we will, look, we've had some, look at this bounce off 140. Once we cleared 140, pretty good bounce here. So I'm thinking third drive, 140, and then a move back up towards this 155 level for right shoulder. So a couple of trades here. EuroCAD down first towards 140, then a big up above 150. Symmetry would be up around the 155.60 level up here, and then an eventual breakdown under 140, which is going to give us a 120 EuroCAD. So there's some actionable things setting up here. Could be a nice little short. It's something I talked about from Monday, so you already have a lead. So that does based upon my euro bearish look in the euro. So we'll see what happens here. Looking for 140, beginning to diverge here. But still think that we could get a third drive on the EuroCAD. Which comes in all the way down here. Some people are going to be looking to buy this break here. Either way, if we don't get all the way down to 140, I don't think that if we start to head up from here, then we'll get 157. But I still think there's a chance we head down to this 141 level. Give me a Y if you're with me. I want to cover Euro Aussie as well. So the Euro Aussie is in this big triangle, something I talked about. It's treated us pretty well because I was looking for this rally from down here. We've had the neckline similar to Euro CAD and Euro Aussie. It's trying to roll over here at the 61.8 level. I'm not sure if this is going to complete it. Really doesn't look like it's enough. But I do think that we could have a pullback first, perhaps back down towards 150 and then get one more shot up. This is going to be more of the major sell zone up around 159 to 160. So perhaps we get a pullback here towards the 153 level, 52, even 51 before we head up here again. So looking for this and then one more push up in the Euro Aussie. Give me a Y if you're with me on that. So we want to talk about the Kiwi. What's going on here?